Hello. So Dynacons Systems and Solutions is an IT company or an company in the IT sector basically. It provides IT infrastructure facilities. So as we can see, there's a lot of numbers on the screen. We got the market cap, we got the current price. Market cap 1200 crores, 1263 crore rupees. So not the biggest company overall. Current price of one share 993, stock PE of 17, return on equity of 37.3, return on capital employed of 39.2. So very high return on equity and return on capital employed numbers. So nice. So the point of this whole video is we are going to be analyzing its revenue and its profits over a long period of time as far as we can go, as back as we can go. On here only, screener.com. This is screener.com. So as far as we can go, you will find out its revenue and profits. You will look at them. We look at return equity and return capital employed from as far back as screen.com shows. And moving on, we will also go into its annual report. We will go into what kind of orders, like work it has got, who are its main clients. And finally, we are going to look at the stuff said by its own management in the past through these annual general meetings. We will look into that further in the video. So, stuff said by the management itself, what the management has said about the business, important information disclosed by, as I said earlier, the management of the company itself. So, let's start. Okay, so return equity, return capital employed, we already saw it. It is pretty high 30%. Stock PE 17, all right. Current price 993 per share. First thing, profit and loss statement. All right. So we got numbers from 2014 all the way to 2025. Yes. Okay. And all these numbers are in crores. So we have sales, we have expenses, we have operating profit. Below that, we have the operating profit margin. Then we have the profit after tax. Then we have net profit and tax percentage, how much of their profit before tax they are paying as tax, effective tax they're paying. And finally, we have the net profit. Here we can see the sales growth also. Okay. 77 crores in 2014. Moving forward, 124 crores in 2016. We can see the sales growth figures also directly below. 18% growth in 2016, 35% sales growth in 2015. 2018, 211 crores. It crosses the 200 crore mark. Then 2019, 44% growth in revenue, 300 crores crosses that mark. 400 crore mark crossed in 2021. Next year, 650 crores in revenue. Next year, 804 crores in revenue. Massive growth, double digits, 20%, 20%, 50%. Then 1,000 crores in revenue. And finally, 1,267 crores in revenue and 20% double digit growth. So, growing extremely fast. Then the other trend we're going to look at is the operating profit. 3 crores. Okay. But 4% is the operating profit margin, which is operating profit as a percentage of total sales. So 4%. Okay. 3% operating profit rises to 7 crores. 15 crores in 2020, 4%. Then 2022, pay attention 2022, 31 crores operating profit, 5% is the margin. Then 2023, 7%. 2024, 8%. Finally, 2025, 8% is the operating profit margin, 105 crores in operating profit, net profit of 72 crores, and net profit you can see is also rising a lot. 72, 54 in 2024, 33 crores in 2023. Right. So operating profit margin is consistently rising. It was 3, then became 4, then became 5, now sitting at 8. And according to the latest figures, the latest earnings, let me show it right here. These are the quarterly results, okay? The latest quarter results. So around June 2025, the quarter one fiscal 2026 results are out, and revenue growth was very small. Maybe just saying 2% was this quarter. Not saying that affects the company on a longer scale, but just this quarter was 2%. But operating profit margin is now 10. The first time it has hit almost 10% or double digit operating profit margin consistently. It's hitting 9, close to 9. As you can see, March 2025 figures, December 2024. So operating profit margin is consistently rising along with stellar revenue growth overall. Here we can see the compounded sales figures and the compounded profit growth figures. These are compounded, so annualized, you can say. Compounded sales growth of 28% over the last 10 years, 31% over the last 5 years, 25% last 3 years, and trailing 12 months or sales compared to 12 months ago, 21%. Profit growth of 59%, 64% over last 5 years, 59% over last 10 years, last 3 years also 64% and 29% last 12 months. So profit is growing clearly faster than sales, and which reflects in the improving operating profit margin. And why has this been happening? Well, there's one reason. We will go into it in the future. Stock price, okay. Last year, of course, I invested in the stock in this year only. And of course, it fell 26%. Overall, without me, we can see the growth in the share price. Then return equity, very important, consistently rising. So investors are, if they're investing in this company, the investors of this company are getting more and more return on the equity. Now, this is not financial advice. I can't advise on anything. This is just a presentation. So return on equity has been rising 32% from 10 years ago, 36% 5 years ago, and 39% 3 years ago. This year, 37%. Then moving on, we can go to the return on capital employed. Yes, bottom of figure. This is 2014, return on capital employed 9%, rising slowly to 14% 2018, 20% 2019, 23% in 2021, and 28% in March 2023, and moving all the way to 36% in 2023, 2024, 44%, and 39% return on capital employed. Operating profit margin has been rising, return on equity has been rising, and return on capital employed has also been rising. The last thing to see from here are these. These are the cash flows, which is the actual cash the company has been generating. In profit and loss statements, there are certain non-cash expenses like depreciation, amortization. So these are not included in these. These are added back, basically. So 6 crores, okay, cash flow from operating activities. Uh, Fluctuating a bit in the early years, minus 13 crores 2018, 4 crores in 2020, 9 crores in 2021, minus 15 in 2022. Overall, last 3 years, uh, spectacular growth from 15 crores to now 64 crores in 2025. So overall, it seems like you can see from 9 to 19, there has been a rising trend, basically. Earlier, it was a bit fluctuating. Now, clear trend has been observed historically speaking, only historically speaking. Past performance cannot determine future performance. But historically speaking, the cash flow from operating activities has been increasing at a substantially high pace. Moving on, we have the company's own website. Yes, this is the company's own website, and here they have made some announcements about press release announcements of the orders that they got. Some of the orders are this. Now, Dynacons bags 116 crores contract, private cloud solution order, private cloud solutions contract from who? The Union Bank of India. This is a PSU, this is a public sector unit, Union Bank of India, a government owned company. All right. It wins a prestigious project of design, setup, and support of the next gen cybersecurity operations. So private cloud solutions and cybersecurity. So we learn two things: cybersecurity services and cloud solutions itself. For who? Okay. Solutions for the Rajkot Smart City. So for Rajkot Smart City, it won project. And we also learned that it provides private cloud solutions to Union Bank and next gen cybersecurity solutions to the Rajkot city. Moving on, we have some few more contracts. Okay. It wins orders from Life Insurance of India, so LIC. Then, yeah, here. Dynacons is to deploy software defined wide area networking for 6,000 branches of Bank of Baroda. So one for Bank of Baroda. All right, I'm back. Okay. Continuing, it wins a managed services order for IT security solutions for Punjab National Bank. So this company has secured orders from Punjab National Bank, Bank of Baroda, the what was that? The some smart city, Rajkot Smart City, the Union Bank of India. All right, LIC, Life Insurance Corporation of India. Okay. Then for State Bank of India, Dynacons is to set up IT infrastructure for the State Bank of India for the new branch campaign. Then there are few contracts at the bottom of this page. 10 crore contract from NPCI, another two contracts, managed services contract and a 20 crores order from LIC. And here, yes, contract for the infrastructure of Godrej and Boyce. I don't know what this is. So, a lot of public sector banks. We have the Punjab National Bank, we have the Union Bank of India, we have the this Godrej, we have LIC, NPCI. I think I already said some. What is that called? Smart City. So a lot of different work it has been getting, but a lot of work from public sector enterprises. That's the key point to keep note of. Moving on, we have the annual report of this company. Here's the consolidated balance sheet and only a few things to see from here. First, we have current assets. Current assets, all these figures are in lakhs, is one. So current assets of the company or the assets which can be converted into cash within 1 year, 57,759.43 lakh rupees. Last year was 39,235. So why am I showing this? To compare current assets moving down to current liabilities. Total current liabilities. We can see current liabilities. Here the totaling has been given. Uh, Not this figure, that is total liabilities. The figure above that, 41,478.11 current liabilities here and 27,000. So a lot of current liabilities. That is, I believe, around 400 crores. I'm not sure. Is it 4,000? I think it's 400 crores, 414 crores in the current liabilities and around 577 crores in current assets. So current assets are more than current liabilities, and current assets divided by current liabilities is the current ratio. And the higher this ratio, the higher are the current assets over current liabilities, the better it is for a company's health or financial health, balance sheet health. Uh, Current assets represents a company's liquidity. So more it has over current liabilities, the better, the more liquid it is, the better it has an ability to pay off all its short-term debts, to meet all its short-term liabilities and all that. Moving on, we only have one more thing to see in this annual report: revenue from operations. Revenue from operations. Okay. Now, we already saw the revenue figures around 1,200 something crores for fiscal year 2025. But this company says it's engaged in systems integration, which includes the sales of products and services as a complete solution. So the only segment that is has this company presents only one revenue segment, only one revenue source, that is systems integration. So whatever services it sells, whatever products it sells to the customers, buyers, It all comes under systems integration. And system integration kind of means integrating technology, like say new tech, into your already existing business. Let's say you have a business and integrating some new things like cloud infrastructure, some new IT infrastructure, some new technological solutions, integrating them into your already existing system. Then revenue from India and revenue from exports and revenue from Singapore. So revenue from India is the majority. Here you can see it's basically the whole of it. So, okay, almost all of its revenue comes from India, and a very small portion, which is actually seems to declined from last year's. These are the current figures. So this one is the current figure, this year's, and last year's is this. So revenue from exports have actually declined, but revenue coming from India is the major thing, and it's the thing that is actually growing. So now we've seen the annual report, we have seen the balance sheet health, we have seen revenue coming from India, coming from exports. Finally, we have the general meeting transcript. So general meeting, the annual general meeting, the companies hold these meetings for shareholders. Shareholders can ask questions on these meetings and management will give answers. So this can be very important into having some more insight into a business you're interested in. This is the 28th annual general meeting. And here on this meeting, when we go to page 3, we come across this statement given by the company's management. The rich portfolio of services offered spans across the entire IT infrastructure lifecycle of plan, build, run, and monitor. Keyword, the rich portfolio of services offerings, okay, spans across entire IT infrastructure lifecycle. Entire IT, from setting up IT infrastructure, from managing IT infrastructure, maintenance and operations of IT infrastructure, helping you implement IT infrastructure, upgrading IT infrastructure, all of that entire life cycle of cycle planning, building, running, and monitoring. Everything, the services span across everything. So Dynacons provides services to its customers which spans across entire IT infrastructure lifecycle, starting to end. So if a company wants something to do with IT infrastructure, Dynacons can help them to the entire way if it comes under the expertise, whatever need the company has. But let's say a company has some needs and Dynacon can meet them, can meet those needs. They can provide services for the entire IT infrastructure lifecycle. Moving on, we have page number 9 of this general meeting. All right. So this is a statement said by who? Statement said by their executive director and CFO of Dynacons. They say that they had one single segment, which was the systems integration. Systems integration is itself divided into multiple facets like data center, networking, security, cybersecurities, workplace, smart city, that contract for Roachcart smart city, managed services. And all these are components of the system integration projects. They are identifying and declaring revenue basis, the entire system integration, because the nature of the business important, such that in between like data center and networks, there's a very thin line in there in terms of projects that we undertake there. So hence the entire business is recognized as a single segment for the previous year. So whatever more specific services they may provide, as they have given example, networking and data center, there's a very thin line there in terms of the project. So the project may include multiple things. Project from a client may include multiple services. That's why everything is recognized as one single thing. Okay. Then, in terms of margin profile, operating margins, we saw operating profit margins were improving for this company. So here he says that in terms of margin profile, Yes, we have made a conscious effort to improve the margin profile, and we have been seeing the results of the same before. And we are definitely striving to say work towards a double digit market profile, which they almost achieved or did achieve of June, this latest quarter, June 2025. And this meeting happened in 2023. So 2 years ago, he said this, and they seem to have achieved this. Uh, yes, one of the factors which contributed to a margin profile over the years is that we've built a good amount of customers there. They have got some marquee name, some big clients in the BFSI sector, in the public sector, in the global customers. So these are the lead marquee customers, and we have a large amount of solutions that we can work across. Important keyword is work across. So when we are working with an account, then they horizontally move across, meaning they have a client, the client has one particular solution, they sell them solution, then in the future, they can sell them even more solutions to the same client that they're already in contact with. That is why they are saying that the margin is improving. One of the reasons they're cross selling, not cross selling, horizontally selling more and more services to the same client. We may acquire a client with any one particular solution portfolio, but then we move horizontally across and then we partner with the customer rather than act as a vendor supplier. So, okay, no. We partner with the customer, address the pain areas, and work with them and offer our entire solution portfolio. A large amount of their all their projects have a lot of embedded services built into this, which leads to an increasing in the margin profile. So to existing customers, they will sell some solutions. Then in the future, they can sell even more solutions that the client may need. Selling the same thing, selling more value adding services to the same customers, leading to better revenue growth, better profit growth, and better margins. Another area which is very important, let's read this, is vendor consolidation. Globally, you are seeing that companies today and enterprises today are looking to consolidate their vendors. Vendors, people providing them services. They don't want to reinvent the wheel every time. They don't want multiple vendors. They're looking for one single vendor with whom they can work across, build their technology. And this is where Dynacons comes in. This is an advantage that Dynacons possesses because they work across the entire IT infrastructure landscape. They have capabilities right from data center to workplace, all services around all these areas. So hence they are able to become a one-stop solution provider to a company. They can become a partner to the company. So they can help them fulfill their entire digital transformation. So this vendor consolidation move by companies where they don't want multiple companies providing them solutions, they want one company. And Dynacons can help them throughout. Now, here they say that SaaS, cybersecurity, and RPA, these are some of the biggest concerns for Dynacons right now. SaaS, which is software as a service, they already provide. Cybersecurity, they also provide. RPA is robotic process automation, which means that there will be some tasks, manual tasks, which are repetitive, and you can automate them with robots. So cybersecurity is definitely one of the biggest concerns, and RPA is basically AI with ChatGPT being announced. All right, so robotic process automation. Then, a few more details we have in the 27th annual general meeting of this company. This is from 2022. Here, they've also mentioned some important points. All right, uh, this is said again by the executive director and CFO of the company. Here, they said most of the contracts that Dynacons undertakes are multi-year projects, not single year, multi-year projects, where there's a portion of the revenue which accounts in the current year towards the implementation and setup. So implementation and setup of, let's say, the IT infrastructure. The current year, this let's next 12 months, the revenue of the project. So portion of revenue will come in the current year because of implementation and setup services. Then over the next few years, there will be the operations O&M phase. So operations and maintenance. So any project happens for a client, first will be implementation and setup that will provide the initial revenue. Over the next few years, part of revenue will comes from operations and maintenance services, also provided by Dynacons. What else did we need to say? Okay, moving on. We have page number 10 of this general meeting. Okay, again said by the executive director and CFO of this company. No, we do not have a concentration of revenue. So to the point, I can maybe add the top 10 customers do not constitute more than 50%. That is the ballpark figure, not going into more details. Okay. So the top 10 customers contribute not more than 50% of revenue. Then, talking about the revenue base, it is pretty broad based and pretty much diverse across the industry segments that the company operates on, whether it is global customers, whether it is BFSI, the public sector, Indian enterprises, it is across the board. So the CFO is saying that its revenue source is pretty diversified across the industry segments. Then, here he says that he can give you which are the top contributing verticals, the top contributing industries. They have the BFSI, which is the banking financial sector, banking, financial services, insurance sector is one of the top verticals for them. And then they have public sector and global enterprises. So these three are top three for them. BFSI, public sector, and global enterprises. And in total, they cover around 60% of the revenue. They cover around 60% of the revenue. And I think that's it. So the entire thing of Dynacons is say is systems integration. Unlike any other IT company, they help other companies, let's say, integrate, implement new tech to improve their own efficiencies and all that. This company has got a lot of orders from various public sector banks. They've got orders from smart city solutions. System integration is the main thing. They have been growing very fast, very fast growing company. The cash flows have also been growing very fast. And I think that's it. Yeah. Majority of revenue comes from three growing verticals, is public sector. So that is unique, public sector being one of the main customers. BFSI, banking, financial. And even in the BFSI, many of them are government owned banks or PSUs. They're PSU banks. And global enterprises, not seen a lot of names there, even in the entire site and all that. So, yeah, that's it. You have a nice day.